Hello guys, welcome back to the next video. And in this video and in this series, we are going to solve the ISC specimen question paper for 2022, the semester 2 paper. And there are some really important questions that is going to help you even in the ISC 2024 examination and any other subsequent examination. At a concept level, it's important to know these things. So let's get started. In this video, we'll be solving the short questions, mainly the 1 mark questions. Okay. The first one that we have is on redemption of debentures, where we have the list of redemptions given here. This is like redemption by draw of lots in installments, and you're requested to calculate the amount that will be transferred from DRR to general reserve, right? So when we redeem a debenture, the amount is transferred from DRR to general reserve, and you are required to calculate that amount as on 31st March 21, how much will be transferred. So as you can see here, on 31st March 21, the company is redeeming 1000 debentures at the rate rupees 100 each. The value of these debentures is coming to 1 lakh rupees, right? So as per the rule, the 10% of this value, the debenture redeemed, is transferred from DRR to general reserve, right? So 10,000 is the answer. 10% of 1 lakh is 10,000, right? This is how you have to calculate. They can give you any other date, maybe 2020 March. So 5,000 is the amount. In that case, it would have been 5 lakhs, and 10% of 5 lakhs is 50,000, right? So accordingly, you have to calculate. Be very careful. Read the questions carefully so that you don't end up making mistakes. The second one that we have, again, this you have to understand. Use your basic understanding of accounting. Which of these transactions is debited to revaluation account? For that, you should know that decrease in assets are debited to revaluation account and increase in liabilities are debited to revaluation account, right? And vice versa for the credit ones. Here we are focusing on the debit ones only. So increase in provision for doubtful debts is increase in liabilities, which is debited to the revaluation account, right? Increase in value of furniture is increase in assets. That doesn't suit here. Creditors discharge at a discount. This is decrease in liabilities. That's it also not suitable. Again, don't confuse this with loss on revaluation of assets and reassessment of liabilities. So loss is not considered here because they're talking about only the items from a transaction point of view. Okay. The next one, third one, is an interesting question, and it's important for you to know this. Mm. Here we have the assets which were taken over, assets and liabilities, at a purchase consideration of 6,30,000. Okay, this is important. These are to be payable at, like, by issuing 10% debentures of 100 each at a premium of 10%. So issue price is 110. Okay, so if issue price is 110, we are paying off 6,30,000. Then we have to calculate the number of debentures issued, right? Purchase consideration by the issue price, which gives us 5727 rounded off. Okay, you'll get some fractions. Debentures cannot be issued in fractions, so we take the round off figures, 5727. And now if you do the calculation, 5727 into 100, which is the face value, again 5727 into 10, which is the premium, you see that rupees 30 is falling short, and that is to be paid off in cash. So answer D is your answer, option D. Okay, so you have to do the calculations carefully to arrive at the right solution. You might get confused with other options if you are doing mistakes in your calculation. So be careful. The next one. This is interesting and tricky, but if you know the rules, it becomes easy for you, right? So what is it? Anita and Benita are partners in a firm. Anita had taken a loan of 15,000 from the firm. How will Anita's loan account be closed in the event of dissolution of the firm? Now again, loan taken by Anita. Okay, so in this case, the rule says if a partner has taken a loan, that loan is closed by transferring it to the partner's capital account. Okay, had it been a loan given to the firm. In that case, like firm has taken a loan, in that case, that is paid off during resolution. That is not transferred to partner's capital account, right? This difference you have to know to make things easy for you. Otherwise, you will end up doing a mistake here as well, right? So option B is your answer here. Let's move on to question number 2. This is a simple question. Again, you have to know the concept here to be able to answer this and secure 1 mark for yourself. What is the maximum amount of debentures which is unlisted, which an unlisted company other than NBFC and HFC can redeem out of its capital? So answer is 90% of the face value of the debentures to be redeemed out of capital, as 10% is to be transferred to DRR. Okay. Next one. This is again one very important question, and I've seen a lot of students doing mistakes here because again, I don't know, maybe they don't understand the question, they don't read through the question properly. Okay, you are required to calculate the value of the inventory here. The journal is also required. So what is the value first? That is important to be calculated. So if you see, the value is 30,000, and when you're realizing it, easily marketable items are there which are realizing 65% of total inventory, and that is realized in full. Okay, so you're getting 65% of 30,000, that is 19,500. 20% are obsolete items and these are discarded. That means you're getting no value out of it, so zero value. Okay, and the remaining is 15%. Okay, because 65 is gone here, 20 is gone here, 85 is gone, so remaining is 15%, and that is realizing 40% of the book value. Okay, so 15% of 30,000 that you do, and you calculate 40% of that, that is 1800. So the value of the inventory, the realized value of the inventory is 19,500 plus 0 plus 1800, which is 21,300. Okay, you're required to pass journal entry for the realization of stock. So what is the journal entry? I'm sure you must be aware. So let's write it down. Now stock is transferred to realization account already. So stock account will not come into picture. You are receiving money by selling the stock. So cash or bank account debit. Okay, to realization account. That's your journal. Okay, all right. So this one is done. Let's move on to the next short question that we have down here, which is question number 7, Roman 1. Again, for this, you have to know the answer. There is no trick around it. Which one of the following analysis is considered as a dynamic analysis? This is from the first chapter of volume 2. So horizontal analysis is the dynamic because it interprets the changes in financial statements over two or more accounting periods based on historical data. Okay. The next one that you have, state with reason whether old furniture written off would lead to inflow, outflow, or no flow of cash and cash equivalents. So old furniture written off, okay, these are not sold off. So this will not lead to any inflow or outflow of cash and cash equivalents. Journal entry for this is depreciation account debit to old furniture account. So no cash account is involved. So no inflow or outflow of cash. Okay. So these are the questions that we are covering in this series of the video, this part of the video. We'll catch you all in the next video with the next set of sums that we have. If you have any questions, do let me know in the comments box below. I'll be more than happy to help you out. And if this really helped you, then hit the like button and do share with your friends to make their life easy as well, because this is important for everyone to practice together and secure good marks for yourself. Thanks for watching and stay tuned for more videos.